Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Hey everybody, Dave Bartosiak. Welcome to Top Stock Pick of the Weeks, where this week it's yours truly, along with Nina Mishra, to give you our 2 top stock ideas for the week. So why don't we go ahead and get into my top stock picks. Penske Automotive Group, ticker PAG. Let's take a look at Zacks.com and see why I like it so much. Penske Automotive Group here is a Zacks rank #1 strong buy. Take a look at the style scores: an A for value, a B for growth, and a B for momentum to help it round out with that VGM composite score of A. So far the Zacks ranking is about as strong as it gets. How do we get stronger? Top 1% of our Zacks industry rank. That's the Automotive Retail and Wholesales Group. Pretty amazing stuff in terms of the Zacks rank. Now, what does that mean for the stock? Let's go ahead and take a look at the detailed estimates tab here on Zacks.com. And here is where you start to get into the nitty gritty. So last quarter's EPS surprise, 24.86% to the upside. They are about to report in 2 days. So on Wednesday, before the market opens, July 28th, we're going to have a report. It's actually a real positive earnings ESP. I know you folks know that I run Surprise Trader, and that's something that I look for when I'm looking at new Surprise Trader stocks to add. And now let's go ahead and scroll down. Take a look at this. This is something that's pretty dramatic, I think. PE on this stock, 8.35 earnings. Compare that to the industry, 11.4 times, but the S&P 500 is 23 times. So it is cheap relative to not only its industry, but of course the market as a whole. That's pretty good. That's something that you do like to see in terms of valuation, so that's nice. Now, let's go ahead and take a look at these sales growth numbers. Monstrous numbers for the current quarter, 77% sales growth. Now remember, this is sort of year over year, right? So yeah, not a lot of car sales going on about a year ago, but they're sure flying off the lot now. Next quarter, still going to be good, 14.14% for next quarter. So current year number, 23.7% revenue growth. Next year, it's going to slow, but still, 5.25%. That's pretty decent in terms of growth. How's that going to translate over to EPS? Monster EPS for this quarter. That's going to help the year round out 46.84% better than last year. Pretty nice. Next year, that number is expected to slow, actually contract a little bit. But I think it's just because things are so crazy right now. Used car prices are through the roof. You can actually sell a car you bought a year ago for more than it costs to buy a new one now. That's right, because you just can't get a new one. You're going to be waiting. Look at this trend on EPS. Current year, they thought they were going to make $7.54. That's uptick to $9.75. So next year, thought they were going to make $7.98. Uptick to $9.08. But see, this is what I kind of wanted to point out in the numbers. Although you have a contraction for next year, think of it relative to where they thought sales were going to be. You know, they thought they were going to do $7.54. So when you look at that comparison, $7.54 all the way up to $9.08 for next year, when they thought it was only going to be $7.98. I mean, these are all moving in the right direction. Something you definitely want to see, some positivity. And I mentioned that most recent earnings beat. They've got a pretty good track record going back several quarters of beating earnings. So when you put those all together in the formula there, that makes for a pretty good stock here on Penske Automotive Group. That's my top stock pick of the week. Nina, what do you have for us?
Thanks, Dave. I'm Nina Mishra, and my top stock pick this week is ASML Holding, ticker symbol ASML. Now, we all have heard about this global chip shortage, which was caused mainly by the supercharged demand for computing caused by pandemic-driven trends. And chips are not easy to manufacture, and because of that complex manufacturing process, foundries cannot just increase chip production at a short notice. So that is why most experts expect this shortage to continue for a few more months. Now, while a chip can take 1 to 3 months to manufacture, chip making equipments usually take much longer to manufacture. And that is an even more complicated manufacturing process. So that is why chip equipment makers are another way to profit from this trend of rising demand for high computing chips. Now, the company that I'm talking about today, ASML, it is a Dutch company and it is the maker of the most advanced chip manufacturing equipment. This company is known for its extreme ultraviolet lithography or EUV technology. And EUV is used in advanced chips which are needed for personal computers, smartphones, data centers, etc. And this technology basically uses light, ultraviolet light, to etch integrated circuits onto silicon wafers at a minuscule space. And this company sells the equipment to major chip makers, including TSMC, Samsung, and Intel. TSMC, Samsung, and Intel's are its major clients. Now, the company reported better than expected earnings last week and also raised its guidance. The guidance was much better than the street estimates. And it also announced a new stock buyback program, and because of that, because of all those, the stock price surged, and the stock has actually done very well this year and over the past 2 years. And the CEO said that the massive demand for leading edge chips in areas like artificial intelligence and high power computing is fueling great demand for their equipment and also their software upgrades, which their software upgrades have higher margin even than their equipment. Now, this company enjoys almost a monopoly in this area, and all the major chip makers, which I mentioned, are dependent on this company. Now, there is a geopolitical risk factor in this stock and this company because the US is trying to prevent ASML from exporting its most advanced machines to China. And China is also a major market for semiconductor chips. But given the power this company and the position this company enjoys and extreme demand for its products, I think that is not going to have a major impact. Now let's take a look at some of the charts by going to the quote page on Zacks.com. So this is a Zacks rank number 2, buy rated stock. It has surged a lot, so obviously it has F for value. It is not cheap. A for growth and B for momentum with a BGM score of B. Now you will see that it is trading at a forward P multiple of 47, which means that it is much more expensive than most chip equipment makers, not chip companies, but chip equipment makers, which usually trade at a cheaper multiple, and also compared to most other European stocks. You will see that the price had surged after the company reported its results last week, and you will see that analysts have raised their estimates for the company after the company reported its results. And you will also see that the company has continued to deliver positive surprises over the past year, and some of them major positive surprises. As far as valuation is concerned, yes, it is an expensive stock in terms of valuation, but we have seen that investors are willing to pay for growth. So I think this stock can continue to rise because of its extreme unique monopolistic position in the chip global semiconductor supply chains and its unique technology. Now, if you are interested in this company, I would certainly encourage you to go to the company's website, and there's a lot of interesting material about the global chip shortage, and also about ASML's technology and the lithography system that they use. It is pretty interesting, and if you want to learn more, you should definitely visit the website. And again, it's a Zacks rank number 2 stock and worth a look. Thanks for watching. Make sure to check out zacks.com/promo for an interesting offer. And also make sure to subscribe to our videos so that you do not miss anything. And I will see you next week.